So starting off with trading, what's futures trading tip of the week?
I don't know if I went over this in full detail before, but to my futures traders, having too tight of a stop loss is almost worse than having no stop loss at all. A lot of times when we're looking to get into a move, we're looking to protect our account. And both of you can speak of this from the options perspective, but sometimes you can have a stop loss that is so tight that you don't even give yourself room to be able to let the move fully mature. So I know somebody last Friday who probably missed out on like 60 grand having a stop loss at $1,200. Like, I get it. If you're trading a bunch of contracts, you want to have protection, but you need to put your stop loss in places where the brokerages and competition won't hit your liquidity sweep zones and stop loss zones and hunt there. And also too, like we were talking to one of our good friends before this, you have to know the exit before you get in. So if you're going to lose $6,000, but the upside is 60 grand, why cut it off at 1250? You go into it knowing, put this in chat, go into it knowing what your maximum loss will be and what your maximum profit target will be, but having too tight of a stop loss damn near is worse than having no stop loss at all.
It's a terrible feeling. It really is. It's a terrible feeling
for it to go down and then go where you knew it was going to go. Oh my God.
Yeah, it's tough. I think that's why a part of that plan, we always talk about having a plan, is figure out what that threshold is. I know some people don't have a strong threshold, so it might be a 20% pullback. But especially when you're talking about equities, that's a correction, right?
Yeah.
When you talk about futures and options, that's a blip
on the radar. Yeah.
Right. Like that could be in 5 minutes. And so you got to take that into account, how volatile that these assets move or these derivatives move. And so 20%, it feels like, all right, depending on the company, that feels like it's safe. But, like I've said, I've depending on the company, Nvidia, I've taken a stop loss off because I understand the company, I understand how the market moves, and I understand the long-term vision for it, which is why we always buy time. And so if you don't have time in you, right, and you're having these, you're going to lose out. So putting that there, I like, and I know Ian, we've gone back and forth. When I'm doing an option call, 30 to 40%, I feel like is a safe space. Now, like I said, depending on the company, that'll change.
The quality of the company, yeah.
Quality, Micron, I've changed that for. Microsoft, I've changed that for. But like Super Micro, right? Once it hits a threshold, I gotta go. Yeah, I gotta go. I don't love, right? I'm not in love with the option trade, right? It makes sense, and I feel like it can make money. But if it's not making money, then there's another opportunity where we can put that capital. So have a plan before you enter any position. We can say it, but most people still don't do it, right? Like we talked about our close friend, made money, and now it's trying to figure out, what should I do?
You have to know the exit.
You got to have a plan.
Enter. Yep. Because you can't figure out how to assemble a plane on the way down. I know they love to say that in Silicon Valley, like figure out how to build a plane on the way down. It doesn't work that way in real life. You're going to crash out every time. And also, too, even with the asset, they were trading the ES Mini, the S&P 500. I'm like, if you knew the market was falling, why have such a tight stop? And we've been falling, but it's fear. It's fear. A lot of it is not knowing your entry, not knowing your exit, when you're going to profit. And then the other part that isn't talked about enough is you're doing so many different things. And when you're trading, you end up getting confused on how this is going to pan out. That's why I say trade one way in, one way out all the time. So you can have a huge data set to know what the outcome is going to be.
Yes, there's that psychology. We were like talking about it before, but it's that psychology. The fear comes because of the lack of education and experience in it, which is understandable. What is the other side of that when you see people win, right? Like if you're you're watching people, especially when you watch people on social media, it's like, man, they've had percentage gains. Psychologically, do you think that works as a detriment, or is it more advantageous to say, oh, I should be involved? I often wonder how people view that.
Maybe both. Rashad, what you think?
Yeah, for sure. I think it psychologically definitely plays a part as far as investing is concerned, because no one wants to lose money, and then no one wants to have somebody make more money than them. So it's a catch-22, because you don't want to lose money, but then the risk of making money. So you constantly kind of,
Run
in
your own
between.
race. Yep.
Yeah, for sure.
Keep your eyes on your own
Ooh.
paper.
I think that's a bar right there.
Keep
The
your
risk of
eyes.
making money.
Mhm.
Like you already said, the risk of making money, which is
Mhm.
like, damn, that just sounded crazy just now. But like that's
Because
where we're at.
because you're seeing other people post their gains, but not always their losses. And on top of that, when you start to have too much comparison, that's when the FOMO and the over trading and the over leveraging really kicks in. It really
Yeah.
kicks in. Just focus on your race.